Things have been pretty tough for agriculture out there. Some of it's weather, which not a lot we can do about that when we have storms come through that impact crops, impact livestock. Um, but the other part of it is economic conditions. Things are tough. And as a way to address that, North Dakota's Industrial Commission, which is made up of Governor Kelly Armstrong, Attorney General Drew Wrigley, and Agriculture Commissioner Doug Goehring. Now, part of their job is to oversee the Bank of North Dakota. And so through the Bank of North Dakota, they have launched a couple of programs. One is called the 2026 Farm Financial Stability Loan Program. It offers fixed interest loans, 3.75% for 5 years for the Bank of North Dakota share. And then that's in conjunction with the local lender who get another 1%. That's a $300 million loan program. There's also the 2026 Grain Inventory Loan Program, which is another $100 million more, basically low interest loans, right? The bank, North Dakota owns a bank, and when we own a bank, we can do some financing things where we give up maybe some opportunity cost. We give up some money that we could be charging on these loans to have a lower interest loans to help some people finance and get through these tough times. Here to talk with us about it is Mr. Goehring. Doug, how are you?
I'm doing well. Thank you for having me on.
Tell us a little bit about the impetus for these programs. What created the necessity for them in your mind?
Well, there's a couple things that we had to consider as we went through and developed these programs and made them available to producers. First of all, you would have had to have suffered either a loss in 24 and 25 growing seasons, or you're going to have to have some type of disaster declaration or issue that had taken place. And you talked about weather at the front end of this. There was some rather dramatic weather that came through in some areas in North Dakota this year.
Yeah, I was in Wishick during
When that
the
hit?
tornado. Yeah, when we were watching the storm clouds, saying, "Man, we were in a hotel in Wishick for a funeral." Thinking, I mean, I know the good sausage is just down the street, but I don't know if it's going to be worth an F5 tornado.
Well, yeah, if you didn't get it before, just hope that it's still standing when it's done so that
Yeah,
you
no
can go
kidding.
get it, because that is great sausage. Yeah, you would have had to have had one of those two types of situations. You do have to work through your lead lender. And in some cases, I've had some people call and say, hey, we tried accessing some of the programs and, we're not able to access it. And I said, yeah, because you have to go through your lead lender. In some cases, your lender may not want to participate in the program. They may feel, you know what? I'm just happy with the risk that my borrower has, and we as the financial institution, we just want to do the business with them. We don't need to participate with the Bank of North Dakota. So it's not a bad thing. It's between you and your banker as to whether you access the programs. These two programs that we just introduced really do look at 25 and 24 as to consider you eligible for the programs. Now, with that being said, we understand there's been some hard hits that have happened. So with that, if you look at the farm stability loan, that's the ability to do some restructuring. Maybe it's a bridge loan, get you a little bit further. I would say more in general, when you look at the grain inventory loan, that fits more as a bridge loan, because that's probably working with your banker and determining that, you know what, we're going to be able to service our debt for, it looks like for 25, we might be a little short, but if we access this grain inventory loan and program, it gives us the ability to clean up all that debt for this year, gives us a little bit of operating going into next year, at least the cash flow there. And we have the ability to work from that point. Now, also in both of these cases, you've got to make sure that you have your operating set up, or at least that guarantee from the bank that you're going to be able to operate in 2026. So it's important that people understand some of those things. They don't walk in with a misguided feeling about how they want to access and utilize the programs. And we're lucky. You know, North Dakota has the only state-owned sovereign bank in the entire country. We aren't FDI insured. We're insured by and the backing of the state of North Dakota. So with that being said, it gives us the ability to develop some programs and be the banker's bank, help them manage and mitigate risk better for our multiple industries out there. This just happens to be agriculture right now because there's been several several areas that have been hard hit in our economy.
Mr. Goehring, we've talked a lot about weather and natural disasters and that kind of thing, but some of the issues that farmers and ranchers are having are self-inflicted. Thinking specifically about tariffs, and how are farmers and ranchers feeling about tariffs? I mean, generally, what I know about farmers and ranchers, we want to be able to sell stuff everywhere, right? That's what we
Yeah.
want to do to get those prices up. Is part of this in setting up these programs related to what's going on with the trade markets in the world?
Well, I'd say that is a part of it because as we talked about, it's the economics behind it. You know, about 7, 8 years ago, there was a trade deal that got set up. Actually, it was probably about 6 years ago. And when those trade agreements came in place, especially with China, we had some movement. It looked like there was going to be stability in the markets. And then the worst thing that happened was we didn't have adherence to those agreements. And that really started setting us up for the big fall, which then, as we went through the Biden administration, there was less and less activity. There was no capitulation. There was no adherence to the trade agreements we had in place. And by the time President Trump came on the scene, he's like, well, hey, we need to clean this up. Almost every producer gets it. We need to have a fair playing field out there. We need to have balanced trade. And it doesn't mean that, um, you know, not everything should be subject to a tariff, but there are some countries and some of our allies that were hitting us with some pretty hard tariffs. Farmers, ranchers, we get it. We just want to see things get fixed. Unfortunately, it is so painful getting through this that there's a lot of damage that's been done. And I think some have thought that maybe some of these markets won't recover. It looks as though we've gotten the attention of a lot of the countries in the world, and some things are getting straightened around. I know that tariffs have been fixed in Thailand, for example, the Philippines. We have many of the countries that we have free trade agreements with. Those things came back into alignment. Not that we were out of line a lot. Europe is the big one. I mean, we've been subject to tariffs under the Marshall Program since 1946, 45. So at least we're getting some things in line. We need to work on more trade agreements throughout the world so that we can have some more stability, so that we can have tariffs that are on an equal playing field. And at least now it looks like we're moving forward with some trade agreements with China, and there's going to be some teeth in them and some adherence. So, you know, next year, I think farmers are always good at this. We're great optimists, full of faith. Uh, we can be pessimistic too, but it certainly looks like next year's set up to at least have some good stability, maybe the ability to recover financially, service a lot of that restructured debt, and move forward.
You had some remarks to a meeting of the legislature's budget section um, back in October that I thought were really interesting, and you talked about some doom and gloom. One of the things you were talking about were like crop prices being below break even points for, soybeans and corn and things like that. But then you went on, so you said this, I quote, you said, it's not that the prices are bad. We've lived and farmed with these prices before. Our problem is the cost of production. He described it as going through the roof. You said tariffs add more costs, which continue to inflate the price of goods and services. And then you said, I think this is really interesting. Now that we're doing, essentially these loan programs, you said if you drop interest rates, you actually boost inflation. I'll tell you another issue, interest rates. I've had producers say we need lower interest rates, and I'll tell you, you could give them the money for free and they still wouldn't make it.
There are some situations, and all that's true. At some point, when your cost of operating is so high, your borrowed money, if you got that free, yeah, it might make a difference on the bottom line for some producers, but there's many others that when it's this upside down and you don't have any packages, aid packages out there, any relief, then um, you're not going to be able to save them unless you do restructuring, unless you're putting a lot more equity on the table, assets. It gets to be a problem. And that statement's true. We've sold into these prices before. The problem is our expenses are so extremely high. Fertilizer, 36% more. Fuel, 30% more than previous years. Seed costs, we're probably running somewhere around 27, depending on the genetics you're buying. Seed varieties, 27 up to 41% more in seed prices. Just the cost of goods and services, parts. I don't know if I used this example when I was testifying to the legislature, but I remember just as COVID hit, I needed a sensor for the fuel pump in my tractor. We found it was $1,700 and some dollars, and then I said, "Well, let's wait. Let's take care of this year's operating. We'll get into next year and go from there." The next following year, like 5 months later, $3,700, the same sensor out of the same warehouse in Kentucky. Oh yeah, and by the way, I could have next day air it when we needed it before. Now it took 2.5 weeks to get it. So everything's just gotten turned upside down. Labor's becoming more difficult. There's still people working remotely. And although there's a few jobs that people can work remotely, keep in mind, everything we do is about serving others. And the only way you serve is by showing up. And that's been some of the biggest problems, whether you're in the food industry, you're in the manufacturing, you're in the processing, you're in services in general. We need people to be there. And when you have a lack of labor, all of a sudden you see the cost of labor go up, you see the cost of transportation, processing, managing. It just it's exploded. And producers, especially in agriculture and to some degree contractors and in construction, have certainly felt those same effects and impacts.
But Commissioner, during that statement that Rob just referenced, you said tariffs are basically a cost on production. But when I just asked you about how are people feeling about tariffs, farmers and ranchers, you said they get it and we're pushing our way through and we'll get to the other side of this thing. How many farms and ranches have to go under in the next year to get through this thing? I mean, is your office done any sort of calculations on how many farmers and ranchers are going to go out of business because of the increased input costs, which aren't just tariffs? I understand that, but that feels like the one that's most self-inflicted. Like, what's the cost of this to get through this year, to get through until things are balanced out again?
So we do have a mediation program, and we do help administer the farm management program. A lot of those things you won't know until they happen, because the problem is people aren't going to share stuff until it's so bad that then they reach out for help or assistance. And even in our farm management program, you analyze and go through a lot of data. You're limited on what you can share until there's certain points where you can share that. I don't know. And I will tell you, 2 months ago was different from today. Now that we have some agreements in place, you have a lot more hope and faith out there that we're going to be on the other side of this. 2 months ago, my phone was ringing off the hook. People are upset. I get it. But the reality is tariffs, and I know you said self-inflicted. We didn't inflict this on
No,
ourselves.
understood as a
Yeah,
country.
yeah, as a country. But tariffs increase the cost of goods and services. I mean, that's a fact.
Yep.
And in fact, there was some arguments over what interest rates do. Well, interest from the Federal Reserve is meant to curb some of that economic activity, hold inflation down. Uh, if you lower interest rates, it certainly does encourage more economic activity, but it also puts a lot more pressure within the economy. Now, all of a sudden, costs for goods and services go up, and people don't necessarily understand that. They just look at, well, I want to go borrow money, or I don't want my credit card rate to be affected, in the next quarter. Um, but the reality is, when you put extra taxes, extra pressure on the system, that tends to increase the cost of goods and services. I think to the other side of that too, which has always been a problem, and people have asked me this question, the we look at the cost of those raw products, the food and feed and all those things that are purchased by distributors, processors, food manufacturers. And then they say, the price of corn and wheat and soybeans are up, and the price goes up on the shelf. But then conversely, when the price of those commodities go down, we don't see the costs go down as quickly. Well, there's a factor there that's a problem. And it's built into almost our entire economy. Not everywhere, but that is when you have businesses that budget, they budget for reserves and for profit because they got a service debt, they have to manage things. So they budget at a percentage. Well, what happens if part of that product that's establishing your price in the end, and I hate to make this convoluted, but if that goes down, your percentage now, because you talked about a percentage you built into your budget, now because you're not basing it off from a unit, you're basing it off from volume, you're basing it off from a final revenue number. Now all of a sudden, to meet those, to make sure you're keeping your business open, you're paying your labor, you're paying your insurance, everything else, you aren't gonna see that cost for that item come down conversely like you would on the front end, which is those producers that are supplying those products to the food processors, manufacturers, distributors. So the whole problem in the system is that everybody works on a percentage in their budget, and that works, but they should be working on units. For another, I guess another better analogy would be if you're saying that you need 13% off a loaf of bread, well, what happens if the cost of the loaf of bread goes down? You still need that 13% you budget for. Why don't you start marketing as, I need 41 cents off from every loaf of bread that I sell to keep my store open, or every gallon of gas that I sell, I need this much. Actually, when you start doing it that way, it's easier to budget because now you're
Yeah.
working out from a unit versus a volume.
It's one of the confounding things about being a commodity state. I mean, high oil prices are
Yeah.
and high crop prices are great for the state of North Dakota, not so good for people shopping at the grocery store or buying fuel at the pump. It's just a reality of where we're at. I wanted to talk, you said something really interesting about labor costs going up, because I'm not sure that that's something that a lot of people think of. I mean, I think a lot of people don't live on the farm, just think of a farmer out on his tractor by himself, and understanding this is very labor intensive. Farms hire a lot of people to come work on farms, and other ag related businesses, obviously. So when you're talking about You also talked about like this, the construction industry kind of in the same boat. That's tied to what we're doing on immigration right now, right? I mean, I mean, and not just, I mean, we can have a debate about illegal immigration. I generally agree that people who are in this country legally should be deported. You can't break the laws. That's how I feel about it. I wonder if the very dramatic, over the top, aggressive approach is leading some people who might be coming to the country legally, but because of the color of their skin or their nation of origin or what have you, are thinking maybe America is not a place I want to be right now. Is that impacting the ag industry?
Well, maybe to some degree, but I think we have to separate it into different categories. First of all, there is some labor in the southern border and on the West Coast that they may access some of those workers to do some of those jobs. But I'll tell you, in the rest of agriculture, especially in the Midwest, we need skilled labor. It's We look at the H-2A and H-2B program. H-2B is mainly for the restaurant, hospitality industry, but that certainly does have a connection back to agriculture. But H-2A is specific to skilled labor that we can bring into the country to help us do the work, because you can't find anybody anymore to do it. That's different from immigration. And sometimes when you talk about that, people are like, yeah, you're just trying to get free, cheap labor. No, on the contrary. In fact, if you bring in an H-2A worker from South Africa or from South America or Central America, you're required to have housing for them. You're required to pay for their transportation. You're required to pay them no matter what when they're here. And it gets set on that wage rate is set on a survey, which the survey is a little distorted because it looks at a myriad of jobs that you may have on the farm, or it may look at, for our example in North Dakota, we look at the oil and gas industry, which pays very high compared to everything else in our economy. But what it does is it affects the wage rate
Yeah.
we're required to pay in North Dakota, which when you compare it to Montana, South Dakota, Minnesota, all the states around us, we have the highest rate that we have to pay because we have one sector in our economy and in North Dakota's economy that is distorted the wage rate for the rest of the states. So then we have to pay it higher. One of the things that I'll say too is under the Biden administration, they decided that they would look at if you drove truck, if you operated a payloader or a backhoe, any of these skilled jobs, welder, then all of a sudden you had to pay at those rates. Well, the problem is farm labor is you do everything. You operate the tractor, you drive the truck. Yeah, and when you have repairs and you break down, you might have to do some welding. How the heck are we supposed to all of a sudden jump our wages up $10 more an hour because someone wants to segment everything you do? You need to have very skilled people that are in this job. And quite frankly, the other side of it is no one comes from the city anymore and helps out, even the smaller towns. You can't get anybody to come out and want to work on a farm. Um, it's it's beneath them, or at least some parents tell their kids, nah, you don't need to do that. Just stay in the basement. We'll pay you allowance, buy you a car, pay your insurance, and you can go get a job. But it's got to be one of those good jobs.
Commissioner, I want to ask you about beef as a consumer of beef. We've had some conversations about on the podcast over the past several months of how do I, as a consumer in North Dakota, purchase North Dakota beef? And we've actually had a rancher who's texted in that it's difficult to bring your cattle to the local butcher shop because there's USDA sort of rules and that kind of thing. If I'm Chad Oban and I want to buy North Dakota beef, how do I do that if I don't know a rancher to buy it directly from? And if I do, am I allowed to buy it directly from a rancher?
Yeah, those are great questions. So, a couple things we've done since COVID. We created a program that was the meat processors program, where it helped them upgrade some of their facilities, their equipment. Um, that program was so successful that the feds loved it and they took it national. Unfortunately, what they did at the national level is they required a grant writer to be involved in the process, which now added more cost to the local processor. We have looked at, and I've worked with the secretary here recently on that very same program that can help our small and medium-sized processors expand their ability to process, which also creates more access to the consumer for meat protein. And we're hopeful that that will continue to work. We've been doing some things over the last couple of years to do that. The other thing we did, and you got back to it, what's legal and lawful in the United States of America. There is a law that will not allow you to just go purchase beef directly from a farmer. You're going to have to go through a little bit of a process. Now, we've helped clean that process up, which means you can go to your local meat market and ask them if they know of a producer that maybe has a fat beef and is ready to butcher. If they are, you can purchase part of that animal, and you don't have to purchase the whole thing like they used to say you had to. You have to work that agreement out through that processor or with that farmer. You can do it directly with that farmer rancher. You pay for that portion. And then when that animal goes to get processed, you have to pay directly to the processor. You can't pay the farmer for the processing. You have to pay the meat processor for the processing. Then you can actually get that homegrown beef or pork right from that farmer, but it has a little bit of a step and a process to go through. Never used to happen that way before. We had to fight those battles.
So how about like if I'm a butcher shop, can I just buy directly from ranchers and just sell North Dakota meat in my butcher shop, or is that not possible?
If you are a state inspected facility or a USDA inspected facility, you can. But if you're custom exempt, you cannot. Generally, custom exempt facilities are the ones that when you as a producer or anybody that brings in an animal wants to have it processed, that's for yourself. And in fact, you probably have seen the package of the meat that says not for sale. That is a federal law. You can't. It's not for sale. So whether you're going to take your deer, your pork, whatever in and have it processed, you can take that to probably almost any one of those facilities. But if you're
They
going to
can't sell it.
they can't sell it. So that's
They
why
could just sell. Like you could just pay them to do it, and then you take it.
Yes. And but in the situation where you want to get it from a farmer rancher, an animal or a portion of that animal, you just have to make sure that you're paying the producer for that portion of the animal you're buying or all of it, whatever that may be. And you got to make sure that you pay the processor so that you stay legal and everybody stays out of trouble.
Commissioner Goehring, I just want to go into my meat shop and say, I want those 2 New York strips and I want to make sure they're from a North Dakota cattleman. I mean, that seems like it should be an easy thing to do. Damn government.
I keep that. Chad has become more and more Republican as we've done this podcast.
Well, when it comes to beef, yes.
Well, the
Well, we
important stuff
agree.
like steaks. Commissioner Goehring, thank you so much for your time today.
Yeah, you bet. Take care. Thank you, guys.